YouTube, what's good, YouTube? Hey, it's me, Peni2Dollarzfx, and I'm back at you with a weekly wrap-up video. All right, and so in today's video, what we're going to do is we're going to go ahead and we're going to look at our positions for the week. As we always do, it's Friday, so I'm going to go ahead and close my current positions. But before we get started, I would like to first dedicate this video to you, the subscribers. All right, I gotta say, I appreciate all the feedback, all the comments, all of everything. It's been great. It's been very instrumental in helping me develop the content and helping me develop ideas and come up with just creative ways to kind of put this information out here on YouTube. All right, so with that being said, if you haven't done so, I have to encourage you to like, comment, share, and subscribe. One last shameless plug, if you will. I like to go ahead and plug my book. For those of you who have been waiting to see or waiting to kind of pretty much get a greater glimpse on how I develop my strategy and how I come up with my stop losses, my entries, and my take profit, again, please go grab that book. I think it should aid you very well in assisting you and giving you greater kind of like explanation on my strategy and how I come up with those levels. All right, so without any further ado, what we're going to do, since this is Friday, we're going to go ahead and close our positions for the week. But before we close our positions for the week, I do want to show you my account history because I want to keep everything transparent. And as you can see, looking at my account history, this is what it is. All right, so this week started on the 13th of November. All right, so if you're looking at my account history, you can see, all right, I'm not holding any punches. This is no smoke and mirrors. This is no fairy tale. This is no fairy dust, right? You can see, looking at all of my active positions in the market, all right, my losses, you can see my wins, all right. And yeah, so we started the week with 47K. We started the week, we ended Friday last week. We ended Friday with 47,000. If you look at my previous video prior to this, we ended the week with 47,000 and we started the week this week with 47K. So as you can see, we pretty much did our thing. I mean, we took some losses, but again, as I always say on this channel, you have to learn how to limit your losses. Once you learn how to limit losses, I mean, day trading, the sky is the limit. All right, so look at this. As you can see right here, we took all these little minute losses right here, all these little minor losses. A lot of these, as you can read right here, it says the commission fees, right? So you got commission, all right? But if you look right here where it says close short position, that's an actual loss. That's an actual loss based on the strategy that I use and I deploy over the market that basically I took right there simply because the trade did not play as anticipated. It did not go as we thought or as expected. So we took a loss right there. And so as you can see, that loss only amounted to $4.45. But that's how you want to practice this. You really want to learn how to minimize, and you really want to learn how to identify levels in the market to kind of just limit your losses. And so you can see right there, we had a string of losses. Like, I mean, I can't even make this stuff up. Look, it just goes on. It just keeps going on. And to some of you all, when you start taking all these losses like this could be really, really tough. I mean, because these do add up. They amount to substantial amounts of money. So, but again, we took these huge losses right here. And then once we got right here, all right, on Bitcoin, we got a profit gain of 67.65. All right, so that was a beautiful profit gain right there on Bitcoin. Simply what I did based on the strategy, if we look at the strategy real quick, I got in right here. As you can see, this red arrow. I need to maximize this for you guys to see a lot clearer. But if you look right, I know this is probably going to confuse some of you all. Again, this is greater reason that I would encourage you to go take a look at my user guide and go grab my book. All right, so look, here's what we saw and how I got into this entry right here on Bitcoin. So as you can see right here, Bitcoin came down right here. Well, first of all, I got in on the entry after I saw this right here, this candle right here. It peaked over the moving average. Again, what you want to do, you always want to look for opportunities where the candle either closes above or closes below. And so if you look right here, we were trading in this premium zone. And then I saw price play and do one of these numbers where it started to close above the moving average. So right here, that would have been a nice opportunity for a short, but I didn't get in that trade. I actually got in. Oh, I'm sorry, I did get in this one. This is the short right here. Yeah, I did get in this trade. So what happened right here, let's go back, y'all. Let's go back because I don't want to confuse nobody. So what happened right here is price did one of these numbers. As soon as I saw it come down, As soon as I saw it come down to this level right here, I got in. All right, so right now, here's the higher probability trade. So if you remember from some of my previous videos, I always encourage that you take the higher probability trade. The higher probability trade is simply the trade with the edge. It's the one with the, because all you need is a 0.01% edge. You don't need a huge edge in the market. All you need is a slight edge in the market. And so once we saw this opportunity where the candle started to form below this moving average in the premium zone, because remember the premium zone, y'all, is between the equilibrium and the premium. So all of this right here is what we call your premium zone. So what you were waiting for in this instance right here, we were waiting for price to start forming candles below this moving average. And so like right now we're going to play it forward. And so right there, that would have been your first indication to get in for a short. So right here, you would have taken your horizontal ray, y'all. This is exactly how the strategy played out. And then based off of this entry right here, you would have set it up like this. You would have grabbed the short tool. You would cover this high right here as your 1%. So you would make this your 1%. So you would make sure you don't lose any more than that. And then you would measure this down 3%. And so that's how you would get your risk to reward ratio. Okay. So look, as we play this forward, you can see how the trade played out. It continued to keep coming down. And then y'all, and that's how it works. So I'm gonna share with you, like, I know some of you probably like, wow, why you didn't stay in it? Listen, let me share with you how much this was. This is, well, you already know because we shared with you earlier, it was $6,700, right? But look, I need you to see how far that fell. That's a substantial move, y'all. That's how you measure how many ticks it fell. So you put a nice little lot size behind that, behind these numbers. You put a nice little lot size and leverage behind that, right? I trade with 500 to 1 leverage. So when you're trading with, you know, just, I don't know, even if you're trading with like 50 to 1 leverage, all right, you put a nice lot size on top of that. That's a nice move, y'all. That's a very nice move. And so that's how that move played out. And that's how we took that $6,700 profit. If you look down here, that was the profit on Bitcoin. It was like 67, I think 65. And that was a nice move. That was a nice move. So look, okay, so we have them down here. If you look down here, there's another one right there we took from Bitcoin right there for a short for $8,861. So you can see when I'm sharing with you, you can see based off of my entry setups, based off of my take profits, and based off of my stop losses, this is exactly how I enter and exit my trades. So looking down here, you can see I continue to take these losses. But what we're going to do, since this is the weekly wrap up, we're going to go ahead and look at the positions that we're in today. And I think for the most part, I've closed all my positions. Let's look. That's the US oil. That's the Australian 200, German 30, Spain 35, France 40, Japan 225, NAS 100. These are all materializing, y'all, for a good setup in the future. So I'm gonna be honest with you. Pay close attention to start looking when these, as a matter of fact, I'm gonna just do it for you all. I'm gonna do you guys a favor. I'm gonna show you right now on camera what you should be doing right now to prepare for the higher probability setup. So right now, we already know down here is our discounted zone. So for next week, because it's definitely not playing out this week, but for next week, this is what you want to do. You want to set it and forget it. You go up here to alerts. You see where it says condition. You go to where it says NAS 100. That's how you know what asset the condition is going to be applied to. You want to make the crossing down. Click on crossing down, and then price is when it goes under the moving average, which is the zero exponential moving average. When price, so this is how it should read, right? This is how the alert should read. When NAS 100 starts crossing down below the zero exponential moving average, it's going to trigger your alert on your phone or email. You don't want to do once. You don't want to do only once. You don't want to do once per bar. You don't want to do once per minute. You want to do once per bar close. Once per bar close is so significant because what happens is when the bars start closing, only closed candles are the ones we're concerned about. We don't want the ones that are wicking the moving average. We don't want the ones that just do it one time. We don't want the condition where it does it 1 per minute. You want to do because you may walk away. You may not be at the charts immediately. So once per bar close is the one option that I use for a trigger instance, and then you can name it whatever you want to name it, and then you just press create. And so what happens is it'll populate, as you can see over here to the right. And what happens is once this condition is set up, and once price starts closing candles underneath the moving average, this yellow moving average, then and only then should you be looking at an opportunity to get in. As they always say, what goes up must comes down. So as you can see, we have been riding this wave for quite some time. And I'm going to be honest with you, I'm not one to make predictions. I'm not going to tell you I know which way the market is going. No, I don't do that. I'm simply trading what I see, what's in front of me. So the greater probability trade will be once we start trading underneath this moving average, because then and only then will price demonstrate to us that the momentum is now starting to be exhausted and now the price is starting to come down. All right, but only then will you look to take an opportunity on that. I mean, using my strategy. Now, if you want to take it, by all means, you're free to take it. But I'm simply sharing with you how I've been doing it and how I've been able to compound the account doing exactly that. So that's how you would set up an alert. But right now we have that alert set up on NAS 100. Let's continue to keep looking at the rest of these assets. S&P 500, same thing. Let's set an alert on it. We'll set it and forget it. Condition, S&P 500 crossing down. You only want to get in it right when it starts crossing down, because right now we're looking for the reverse trend trade. So once it starts crossing down, only then should you be interested in actually getting in the trade. So look, now we're looking for it to start crossing down below the 0 exponential moving average. And again, when it's going to trigger you, either once. You can set it to only once. You could set it to once per bar. You could set it once per minute, or you could set it once per bar close. Again, it's so important that you use once per bar close, because you don't care if it just comes down and wick it. In other words, if it just comes down and then it goes back up, that's not a solidified setup for us. You feel me? That's like a teaser. But when you come over here on notifications, you see where right here under notifications, you can have it send you an email when it's triggered. So it'll send you an email, or you could have it play an audio sound, right? I have mine set to play an audio sound, and it can send you what's called an SMS text message. All right, you already know all about that. But the point I'm making is this is how you can set it and forget it. And this will tremendously add to your trading experience and make day trading so much more easier for you to kind of like, dabble in and out of. If you're really looking to take this serious, I encourage you to use this simply because once you put in the time on the charts, you don't want to be sitting at the charts all day. And so this gives you some of that freedom back. It gives you a lot more of that time back. And once you set it and forget it, you get the alerts on your phone. I do most of my trades on my phone anyway. Once you get the alerts on your phone, it's pretty much done deal from there. All right, so anyway, let's move along. I really want to make this video short. It is the weekend, but let's go ahead and look at the rest of these assets before we close for the weekend. All right, US 30 is doing the same exact thing. We'll set an alert on US 30 to do exactly what we just demonstrated on NAS 100 and the S&P 500. So we want to set it up to alert us when it starts crossing down and it closes below the 0 exponential moving average and once per bar close, and we'll press create, and then it's created. As you can see, it populated over here to the right. All right, so this UK 100, looking at UK 100, as you can see, this is the last trade that I'm actively about to close right now for my indices. And right now we're doing very well on the UK 100. Again, no smoke and mirrors, no games, no gimmicks. This is literally how I get in the market. You can see right here, I got in these blue candles, these red arrows and these blue arrows. They indicate my entries, right? So you can see where I got in the market and where I got out the market. Right here, I was looking for the opportunity for a short to set up. I thought it was going to materialize for a short. I got an entry candle. However, you can see what it did. It went back up over the moving average. And what did I do? I got back in it immediately. And so now we're up very well on the UK 100. We're up very well. As a matter of fact, I'm up 1.12%. And if you come down here, we're going to go ahead and close that out for the week, and you'll see my account balance adjusted. And so we still have some more active trades. I think now I have the Forex pairs that I need to go close out. But look, before I close out the rest of my Forex pairs, I just need you to see, all right, October 18th, y'all. For anybody who's still like, who think this is a game, who thinks this is fake, who thinks this is smoke and mirrors, who think it can't be done. October 18th, I started this account with 10K. You guys saw me on camera. I started this account with 10K. I resetted the account with 10K because I thought it was a reasonable, realistic, feasible amount. I mean, we could do it with 1K. That's not even the point. The point is you have to understand the efficacy. You have to understand the consistency. You have to understand the strategy itself is effective, right? Like, I don't even, like I said, I don't even want to get in the habit of sharing the money, because the money isn't what I want you to focus on. I need you to focus on the strategy and understanding that the strategy, once you learn how to apply this strategy to the market, you get all your freedom back. And so that part, understanding that part, and then being able to practice that part is what I really, really want to drive home on my channel. So there's a lot of other Forex traders out there. There's a lot of day traders out there. I encourage you to not only listen to me, but if you're really aspiring to be good at this thing, I encourage you to listen to several of us. All right, there's a couple of them that I listen to, and I often like Artie is Artie. The moving average is awesome. Shout out to Artie. Q Banks. Shout out to Q Banks. These guys have been very Raul. These guys have been very instrumental in offering me content and offering me free education, and I've actually taken some of their ideas, if you will, and applied them myself. So what I'm saying is, don't simply just watch my content. Don't simply just watch my channel. But as you can see, I think I'm a lot more transparent than most people. I will agree that that probably makes me different, simply because I'm showing you from cradle to grave how I do this thing. There's nothing that I'm not hiding anything. There's nothing I'm not showing you. I'm literally showing you from cradle to grave how I take my entries, how I identify my 1% stop loss, and how I identify my 3% take profit. So with that being said, I want to tell everybody I appreciate all the love and support. Please cop the book. The book is available. I also have a Patreon if you're interested and you want like further like one-on-one sessions. All right, I offer one-on-one sessions for people who are really aspiring. Listen, only if you're truly sincere, please hit me up. All right, but I have a Patreon and I have a book available. All of this is designed with the intention of helping you further understand and kind of like get a grip on day trading. So with that being said, till next time, I like to encourage everybody to enjoy your weekend. I know Thanksgiving is coming up, but until next time, this is Peni2Dollarzfx. I'm out.